All right, so for this video, I wanted to talk more on what exactly I'm up to, what I'm doing, what my focus is, especially bigger picture. So I have it broken into a few different phases. The first one is a little bit smaller, and then the second is it's definitely larger, but when you have a certain amount of momentum, um, it's actually easier than you think. Like a great example is I like to run. So someone that can already run half a marathon, so 13.1 miles. They think that they're only halfway to the running a full marathon, but in reality, it's a lot different. Like when you already have the ability to run 13.1 miles, you're really like 80% there to running the full marathon, as weird as it may sound. Like you have such a strong base and so much momentum that just doing that extra 13 miles, it's not the halfway mark. You It's so much easier than you think. So I mention that though specifically because here's the Pareto 20 plan. My big picture goal is helping people afford housing. So just a little background, the US dollar and pretty much every other currency in the world, I'm not aware of any others, they're not backed by gold anymore. So they call this a fiat currency. And the only way fiat currencies can continue to work, which they never do when you really study the history of different monetary systems, they have to have inflation. So inflation isn't by accident. Um, Money constantly has to be introduced to the economy, new money, and this is done in many different ways. The big one is fractional reserve lending. So, for example, every dollar you put in your checking account or savings, the bank can go and lend just a random number. It always fluctuates, but you put $1 in, the bank can turn around and lend $10 for every dollar that you put in. And so they charge you, or they give you a very small interest rate, if anything, but then they turn around and lend it at a much larger interest rate. So that's why fiat currencies, they constantly have to grow. So fractional reserve lending is one of the big ones, and then the other you can research is called quantitative easing, but they print money basically, and they buy bonds with it. So anyway, back to this. The only way you, as a W-2 earner, an investor, whoever, can not be abused by that is owning assets. So this is my shorter term goal. It's a 2 year, about 2.5 year goal. I already have a good amount of momentum towards this. So this is owning 20 properties. Like I mentioned, focus on co-living. A lot of these we do want to buy via subject to. That way the interest rate that's in place, it is very low. A lot of the ones we buy are 3, 4, maybe up to 5% interest rates. And then we don't have to get a bank's permission to buy these either. And then a lot of these that we're buying, we do want them to be pad splits. So we have a couple of pad splits already. A lot of what we're seeing and other investors we know is once it's stabilized, it has a net income of 1,500. So that's per month. And then when we say net income, that's after pad splits cut, utilities, random things like maintenance costs, and the property manager. So each property, 1,500. And then part of the strategy too is once there's enough equity, like after 5, 7 years, you are refinancing and pulling the money out. That's You're pulling some of the money out, and you don't have to pay tax on it. So that's how you could pay off capital partners, any business credit, stuff like that, or just use it to expand more. So some of the other data that we're seeing is every each tenant is staying in the pad split about 10 months. We could own some of these 20 as long-term rentals, which we do. And then this is where it gets really interesting. Each house is worth 400,000 on average in the US. And so this is all long-term data. The average annual growth is 5%, and that's for the past 100 years. That's not like just a very short-term horizon or history. So when you own 20 properties that on average are worth 400,000, that is a portfolio value of 8 million. And it'll grow using all average data, 5% annual. So the portfolio will grow 400,000 a year. Now there's a few different ways this money can be pulled out. Refinancing, using whole life policies. That's a topic for another time. A lot of detail involved in that. But what's really cool is when you look at one property and from a 10-year perspective, so 400,000 compounding annually at 5%. So after year one, you're at 420, and then so on for 10 years. And then when you account for the principal pay down of the mortgage as well, each house is adding 36,000 to your net worth. And so what's really cool is not accounting for even the cash flow alone, you're essentially able to grow. You know, depends how you want to go about it, but the portfolio is growing at 400,000 per year. So owning properties is definitely the best way I know of just building massive wealth and getting out of the W-2, just the rat race. So Pareto 20, this is by December 31st, 2026. And then the bigger picture, the bigger goal is, I call this the Mount Everest. It's 75 properties using a lot of the same metrics by 2028. And so anyone that wants to collaborate on this, hit me up on Instagram. I'm just sharing really what I'm doing, and I can do this with the partners I already have, can help people do this. But the bigger goal is, or the main focus really is tackling the problem that most people don't know what to do, which is the housing affordability crisis. So when you look at other countries like Japan, and look at what their monetary systems have done, their central banks, the middle class is shrinking, and this is a huge problem. People being able to afford homes, it's only going to be growing more difficult. So this isn't all just personal gain. It is solving a problem for a lot of people.